So we have seen just now how the local clearing has been done at an earlier days before we introduced the electronic clearing system. Okay, the clearing local clearing refers to the collection of checks drawn on different banks in the following ways. So whatever we discussed, we are just putting in a nutshell. Exchange of checks takes place at bankers' clearing house, which I told you. Reserve Bank of India or SBI or commercial bank maintain the clearing house at different locations. Here, wherever RBI has the presence, RBI is the clearing house agent. Wherever SBI is present, SBI is the clearing agent. Wherever there is no Reserve Bank, there is no State Bank, then the other commercial bank has become the clearing house agent. Okay. Now the days inward and outward checks between the banks are exchanged and the transaction amounts are netted. After netting of both the debit and credit, they arrive at a figure which is called settlement figure. Local clearing is a net settlement. Okay, this is the way the local clearing is happening. This particular local clearing is nowadays has been removed, and we have got a new system called check truncation system. Think about a situation wherein now the checks are not being traveling from one branch to another branch, or not even traveling from one bank to another bank. The checks, wherever you give the check, wherever somebody depositing the checks only lying in the particular branch. It never moves out of the branch. That is, the system has been brought in by the banking system in India, and Reserve Bank of India has brought this particular system in the year 2013, which is called check truncation system. It was originally introduced in New Delhi. Thereafter, it just percolated down to all of the metros. Under CTS, basically we just call this as a short form CTS. Physical movement of checks eliminated and electronic image of checks instead. So this particular system when it was introduced, and we have something called a new company has been floated by Reserve Bank of India. This is a separate company called National Payments Corporation of India, which is an umbrella organization for operating the retail payment and settlement system in India. It is an initiative of Reserve Bank of India and Indian Banks Association. Originally, it was thought of in the year 2007, but it came into reality only in the year 2013. When originally it was started, there are 10 member banks, 10 core promoter banks have participated in this particular promotion of the company. Basically, State Bank of India, Punjab National Bank, Canara Bank, Bank of Baroda, Union Bank of India, ICICI Bank, HDFC Bank, Citibank, and HSBC. In the year 2016, the shareholding was broad-based to another 46 members, put together 56 member banks to include more banks representing all the sectors. So if you look at as on date, almost all banks are members in this particular NPCI. This is National Payments Corporation of India, in a short form called NPCI. Why we are talking about NPCI? This is the company which is handling that CTS. That is, NPCI is the one managing the check truncation system. In a short form, it is called CTS. It has been in vogue from the year 2013. Originally, it got started in the New Delhi branch, and it slowly we have implemented the same system in almost in all centers now. So if you look at today, we have the CTS presence across all the cities and across in India. Let us move on. What is happening under CTS? Let us talk about what is happening under CTS. See, if you look at the physical check, will be truncated within the presenting bank. It means, for example, in our example, we have taken Indian Bank and Canara Bank. What happens? The buyer gave the check to the seller, a check. So what happens? The seller presented the check in Canara Bank, right? Seller has presented the check in Canara Bank. So what Canara Bank is now doing, instead of sending the check to Indian Bank, Canara Bank retain the check with them, retain the check. So what they will do, they take the image of the check, and only the image will move from one bank to another bank through a system which is called a check truncation system. So each branch of every bank, they have this particular system with installed in their offices. So once you get a check, a clearing check from your customers, the same is being input in the CTS system, and then the image of the check moves on to a common place, which is NPCI now, which is the payment settlement gateway. The NPCI, in NPCI, all the banks are members and they have their account also with them. So that how the settlement is happening between the banks in local clearing, the same way the settlements are happening in CTS. The only difference is that there is no participation by manual, there is no manual intervention. The image is moving from one bank to another bank. If there is sufficient balance in the account gets debited and the proceeds have been sent to the beneficiary bank. If there is no balance, then you get the intimation and you in turn inform the presenting customer saying that whatever check you have presented, there is no balance, the check got returned. So the entire operations is happening through electronic mode, and it is very fast and is very cost effective without any manual intervention. So when I talk about the accuracy, it's 100%. It's very clear and it's very fast also. So what is happening earlier, when there is a transfer of money from one person to another person or one bank to another bank, something called local transfer, it happens immediately, no problem. Where if it is from bank to bank, if it is within the state, maybe it takes around 3 to 5 days. Whereas if there is a check which is coming from Chennai and it needs to go to Delhi, means it's more than 15 days. So the beneficiary is out of funds, it's more than 15 days, which is very, very minus factor in a business angle. So in order to avoid all those hurdles, the Government of India in talks with the Reserve Bank of India and in consultation with Indian Banks Association came out with a very novel scheme which is called check truncation system. This particular system is available across the globe, and we also has become now a check truncation enabled country, and this was going on from the year 2013 onwards. Okay, let us just erase all this whatever we have written over here, then move on. So the check truncation system, as we discussed, there's no physical movement of checks between the banks. Okay, now what are the point of truncation? The point of truncation will be decided by each individual member bank. It means, generally, if you look at, let us take the case of State Bank of India. State Bank of India, if you look at Chennai city alone, they have more than 300 branches. If you take ICICI Bank, they have more than 100 branches. If you take Indian Bank, they have more than 100 branches. So each branch will not have this particular system in place because cost-wise also it's on the higher side. So what happens? Each bank will identify a particular office as the nodal point where all these checks collected from different branches getting pooled in their office. That particular office is called service branch. Service branch is nothing but a clearing branch. That is, each bank, which is a large bank, they have the service branch in a big cities like Chennai, Trichy, Trichapalli, Coimbatore, Bombay, Delhi, Calcutta, etc. So all these checks which are collected from different branches. For example, if you take the case of State Bank of India, they have got around 300 plus branches in Chennai. So all the branches, they send the checks to the service branch, which is situated in the heart of the city. So all these checks gets accumulated at the service branch. Service branch does the job of check truncation. Okay. So now the the point of truncation will be decided by each individual member bank, means if in the case of State Bank of India, it is a service branch. Okay. This is the originating branch and it is the customer location.